You are listening to chartingwealth.com for Monday, the 26th of October, 2015. The insanity continues. China announces that they are going to have a rate cut. So guess what? Even though everything across the world looks terrible, the European Central Bank is making more money available. The Chinese are making more cheap money available. The U.S. is continuing on with our free money, and the stock market loves it. Why? Well, because it's more money to the banks, and the market keeps going up, and that's what we see happening. Now, does it mean that the world is a better place and that business is doing great? No, it just means more free money. And that seems to be the number one driver. In fact, good news, that is, business is doing good, seems to hurt the market. But when there's more free money being given out by central banks across the globe and low interest rates go on, or no interest rates go on forever, then the market soars. And that's exactly what we saw happen. But guess what, folks? We pay attention to what? The charts. We don't pay attention to the media mouths moving. We watch what's going on in the charts, and that's what we see happening, and the market continues to soar up. But as they say, what goes up does come down, but we see, we had the crossover going up back on the 5th of October. The market moved up 2 days, two-day candles on the 15th and the 21st of October, where we had a little bit of pullbacks, but then the market has soared, and the candle on the 23rd of October is a big one with an even bigger, about twice the size of the candle, well, half again as much. We see a wick on top where the enthusiastic bulls drove the market even higher. The bears pulled it down to close at about 102.90 or so. That is for the IYY total market. It was up just over 1%, 1.08%. If we look at what happened on the 4-hour chart intraday, big bump up in the morning. Afternoon, it leveled out a little bit, ran back up to about what it did in the morning session on the 2 candles on the half-day charts, making the entire day. Crossover going up in the total market, beginning with the morning session. And again, that's where we are. Whenever you see the small chart parallel the big chart, you can expect the market to be going in that direction and be a good money day for you. Now let's check out SPY. That is a Standard & Poor's 500. Again, we have a blue line on our chart that reflects the 2-day trend line. Continues to move up. We've got an acceleration in the light green box, which represents our derivative oscillator for the day, and we see a diverging even greater in the MACD and the signal line going up. And of course, we continue to be well above our 2-day trend line. When we revert back to our half-day chart, it looks somewhat similar to what went on in the big market, in the total market, the IYY. We see move up in the morning, and then settling off and then moving up to about the same level in the afternoon on our 2 4-hour candles. Again, that's what free money will do for the market. Now, let's go to the Qs. Oh, and by the way, SPY was up 1.1% for the day. The 2-day chart on the Qs went out of sight, went up almost 3%, 2.8%, so more than double the total market and the SPY for the day, well above the 2-day trend line, and the Qs acceleration up, huge bump up in the derivative oscillator and the MACD separation, the divergence between the signal line and the MACD, also big. If we look at the 4-hour chart, what do we see? Well, we see a massive move up in the morning. Don't forget, it crossed over going up in the afternoon on the 22nd. And we talked about that yesterday, and it has continued to move up. Again, if you had paralleled that move where, again, when we talk about this over and over, let me reiterate. We see where in the afternoon of the 22nd, the MACD crossed over going up. We always talk about The small chart, which is the 4-hour chart, when it turns and moves in the direction of the big chart, which was going up at the time, it's typically a good time to look at getting into a trade in that chart. So when you're above your 2-day trend line in an up move on the big chart, and the small chart has rolled over in the opposite direction as it had done the day before, and then moves back in the direction of the big chart, good time to look at getting in. You would have done quite well over the course of just this day alone, a 2.8% gain. And again, we don't talk about real trades here. We do not give real trading advice. We're not a stock calling service. We're an education site. We are talking about virtual trades, and that is you open up a virtual trading account, become a virtual millionaire by putting $1 million in it, $1 million virtual dollars, and then you start learning how to trade until you make those decisions on your own. Now, lastly, let's go back to our 2-day chart. And what has gold done? Gold was down for the day about 0.17%. We always go to our 2-day chart at first. 2-day chart still shows an up move, but as we talk about over and over again, the best chart that we've found for trading gold is our 4-hour chart, and it has been a great chart week after week, month after month. When it crossed over going down on the 19th and you had gotten in, if you got in somewhere between the 113.03, well, the high for the day was, 113.03, and the low was 111.94. It's all the way down now. It's reached to 111.41, and actually it's been lower than that at some point, down to 110 something, 110.95. So gold has continued to move down. We see that the derivative oscillator lost a little bit of its speed on the 4-hour chart. Gold is continuing to see a difference between the MACD and the signal line. Not coming, looks like it might, a little bit of convergence over the course of the day, but still we'll continue to watch and see where gold is, where gold will settle out on its down moves as the rest of the market soars. We did cross through, of course, the 2-day trend line back on the 22nd. So gold in a down move on our 4-hour chart and continuing to do well in that. You might say, wait a minute, how do you make money when gold goes down? An inverse gold fund. There are several of those, and of course, that is something that if you wish to look at learning how to trade, you could buy that virtually when you see it crossing over going down, or you can wait for your 2-day trend line when you have an up move to be breached, and of course that can also be a signal, but we like the MACD crossover. The trick is to figure out when that movement has stopped so that you can take your profit. Okay, that is where we've settled out at the end of the week as we go into the new week. Pay close attention to exactly what's going on. The exuberance on Friday may not play its way all through the week, so be careful. Take the profits that you've made virtually at the appropriate time. Continue to follow the markets with us. We will be recording and posting very soon our weekly review and forecast. So great to have you with us every day at chartingwealth.com. If you don't have our layout, you need it. It is from Free Stock Charts, and it is the Charting Wealth layout that we'll be happy to email to you. CW at chartingwealth.com. That's C as in charting, W as in wealth, CW at chartingwealth.com. We also would be happy to send you our 15-minute training video that helps you understand what reading a chart is all about, how to read a simple chart, and how to start learning and practicing today. So all you got to do is email us at chartingwealth.com. Follow us on Facebook and Twitter and Instagram. All those are at Charting Wealth. Thanks so much from chartingwealth.com.